Now students, let us have a closer look on the questions that have come in this year's sample paper from this particular chapter of financial management. This is an assertion and reason based question. The assertion says that financial planning aims at enabling the company to tackle the uncertainty in respect to the availability and timing of the funds. Yes, that is true, because planning में हमने यही डिस्कस किया था कि requirement of right amount of funds at the right time ensure करना, this is the prime objective of financial planning. So yes, the assertion is true. But as far as reason is concerned, it says capital structure refers to the mix of owner's fund and borrowed fund. Yes, this is also very true, students, because just now we have discussed that capital structure is nothing but D plus E. So both are true, but the reason is nowhere connected to the assertion, and therefore the correct answer would be option C. Both assertion and reason are true, but reason is not the correct explanation of the assertion. Now let us see another question on this. Now this question says that we have to identify the incorrect statement with respect to investment decision. So as far as investment decisions are concerned, students, the incorrect statement, always mark these negative words so that you don't err in the question. It says net working capital refers to the excess of current assets over current liabilities. This is true, because whenever we write the definition or the formula of working capital, we say it is CA minus CL. So excess of current assets over current liabilities. Then current assets are those which get converted into cash within 1 year. Yes, this is also very true, within a period of 12 months. And capital budgeting decisions are irreversible. Yes, that's also true, because they are long term and involves a huge amount of money, and the decisions are generally irreversible. इसीलिए हमें CRII करके हमने एक acronym बनाया था इसके लिए, capital budgeting decisions. Now size of the assets, profitability and competitiveness are not affected by the capital budgeting decision. This is absolutely false, students, because this is an incorrect statement, and hence the right option for this answer, because size, profitability and competitiveness are all affected by the capital budgeting decisions, which are long-term decisions in the long run for the company. Now another question is stating that identify the decision which is not taken under financial management. Financial management में हमने देखा financial decisions के under we have got 3 types of decisions: FID, financing, investing and dividend decisions. So dividend decision, yes, it is a part of financial decision. Capital budgeting is nothing but investment decision, and it is also a part of financial decisions. Pricing decision, this is nowhere linked here, students, because this is a concept that you will get in the coming chapter of marketing management. So this is the correct answer, that it is not a part of financial management, and both B and C cannot be an answer, because B is definitely the part of financial management. The next question in line. Now this is the question that says that what are the factors that affect the financing decisions. Financing decisions को कौन से factor affect करते हैं? So here we had formed an acronym for financing decisions, CCCC FFR, CFAR. ये हमने decide किया था, CCCC FFR. So here C was for cash flow conditions, for control conditions, then for cost from the project, and also the capital market. These C's were discussed in the decisions. As far as FFR was concerned, this was risk, this was the fixed obligations, and another F was for flotation costs. So these are the 7 factors as we had discussed in financing decision, students. So out of these we need to check that which all have been as an option here. So cash flow position, yes, this is one of the factor as C in the financing decision. Now stability of earning, this was not in this financing, rather it was in the dividend decision. Degree of financial risk, yes, R factor is there in financing decisions. Then contractual constraints again is not a factor, it is a factor of dividend decision. State of capital market, as we can say, yes, this comes under C of the financing decision. And level of competition is nowhere here, it is in the working capital requirement decision. So as from this we can make out that the point number A and the C option and also the E options are correct and relates to the financing decision. So the option with A, C and E is the D option that you should go with under this MCQ. So very carefully, students, you need to put these factors on your tips and at once you have to remember to get at the right answer very quickly, because it's a 1 marker and maximum time that you should devote on this is 2 minutes. Another question, and it says that it is regarding the objectives of the financial management. Read the following statements carefully. Cost of debt is lower than the cost of equity. Yes, the cost of debt can be represented by KD and the cost of equity as KE, and generally we have seen that KD is lesser than KE because it is a tax deductible source of finance. This is the main reason, and also it involves just fixed outlay of expenses in the form of interest. However, in case of equity there are flexible returns. They are we can say the residual owners, so they have to be given whatever is left with the firm. So KD is necessarily lesser than KE. This is correct statement. Similarly, the objective of financial management is to increase the shareholders' wealth. Yes, ultimate objective of the financial management is definitely to increase shareholders' wealth. So both the statements are true and A option goes correct with the answer. Another question, this is a 3 marker this year student in the sample question paper, and it has told to calculate the ROI for the business and also the ICR. The two ratios have been talked about. It seems that it's an account paper, but there are very simple calculations as far as ROI and IFR are the ICR is concerned. So ROI formula, as we had just seen, it is nothing but EBIT upon the total investment, the capital investment, that is D plus E, or the capital structure, and since it is in percentage terms we have to multiply it with 100. So going by this formula, EBIT is clearly given here 15 lakh, and out of this we are supposed to calculate the total capital investment, which is nothing but D, this is the debt component, and E, the equity component in the business. So D plus E, 12 lakh plus 18 lakh, it comes out to be 30 lakh. So with this calculation into 100 for percentage, so it comes out to be 50% the ROI of the business. Similarly, ICR has also been asked to be worked out. So ICR's definition, interest coverage ratio, again it is EBIT divided by the fixed interest obligation. Now EBIT is given as 15 lakh in the question. With EBIT, I mean this, earnings before interest and tax, and out of this 15 lakh, the fixed interest payment is 12 lakh is the entire capital of debt, and 10% is the interest payable on the debt. So 10% of 12 lakh will be 1,20,000. So this has to be divided, and finally you will get the value of ICR as 12.5 times. So these are very easy calculations students, although some calculations has been asked in business studies paper that they are not much in depth, so you need not be afraid of these calculations. Just remember the formula of ROI and ICR, and also another formula called DSCR as given in the factors affecting the capital structure of the company, and from there you can easily solve these questions. So I hope the entire topic, entire chapter is very clear to you. With the use of acronyms, I am sure you are going to crack it. Thank you.